I have with me Mr. Girish Wag, President Commercial Vehicle Business Unit for Tata Motors. Girish, thank you for joining us on Bloomberg Quint. To begin with, you're launching the Ultra range of vehicles, which is between 7 to 16 tons. Uh, what is the kind of market it has in the entire CV space?
So last year, that is financial year 2018, we had a market share of around 44.2% in that, which was a growth of around 2.7% over the previous year. So after a long time, we have bucked the trend and we have actually increased the market share. And we project that with a lot of positive macro and microeconomic factors, this industry will grow. And with this ultra range, I think we are poised very well to leverage this growth.
You were speaking about some of the triggers for this segment, especially smart cities, and how some replacement market is also going to be part of it. What is the kind of growth that you see for the ILCV segment going forward? Because even if you look at the CV market share for you, it went up by 70 bips for last year. Will Ultra be one of the reasons where you will be able to push your market share further in FY19?
Certainly, I think this entire range, ultra range, will be one of our key drivers to jack up the market share further. And as I said, the ILCV range is growing at a faster pace than the medium and heavy commercial vehicles. And now with this ultra range, I think we are in a very good position to leverage this growth and increase our market share.
How is the CV segment looking for you in terms of discounting and pricing which is going on?
So, as I've been saying, the customers have been becoming very, very intelligent, and they look at the total life cycle business of a commercial vehicle and not only the initial cost. And what we have been doing is therefore focusing upon how to increase the revenue earning potential for the customer and how to reduce the total cost of ownership, which finally would mean higher profits for the customer. So customer is therefore looking at the overall life cycle and then taking very well informed decisions. And therefore we continue to do very well in terms of even pricing.
From the point of view of commodity pricing and then headwinds which are coming, one is diesel pricing, which is diesel at all-time high. Do you see all of them as a headwind going forward in FY19 for you?
Yes, these two certainly are headwinds. So we see increase in most of the commodities, whether it's steel, tires and so on and so forth, and this is one of the headwinds. Second one, which is starting to show some color, is this diesel price. Last week, in fact, some of the customers have also started talking about it. But I think, this is the norm of the industry. We have to live within this. So as far as the input increases are concerned, we will pass on a part of it, whatever customers can accept. And the remaining part we have to absorb and we'll continue working on cost reduction.
Is that market allowing you to pass on the entire costing to the customer, because you have good hyper competition coming in from your competitors like Ashok Leyland, who are also discounting in the market?
Right. So I would say certainly not all, and to whatever extent we are able to pass on to ensure that customers' profitability is maintained is what we are doing. The rest we are taking upon ourselves to address through cost reduction.
You also spoke about the export potential for these vehicles. What is the kind of sales that you see from the export of ultra range?
I think so. Within the ultra range, we should be looking at anywhere between 10 to 20% of the vehicles getting into the international markets.
10 to 20% of the volumes.
Yes.
And in the MCV segment, which is 16 to 25 ton segment, the range is not much for you. You have a certain portfolio. Are you looking at expanding that portfolio as well?
So, you see, as a part of our long-term planning, we look at the entire industry. We look at what is our portfolio, what is competitiveness of our portfolio. Wherever competitiveness is low, we obviously work towards improving the competitiveness. But more importantly, I think what we look at is inter-segment shifts happening and what are the new nodes which are coming up. And as a part of our long-term plan, a 5-year product plan which is ready, we are also looking at coming out with products which will therefore address the future, sweet spots in the market. So therefore, since Tata Motors is a player with the widest range, we are looking at the entire portfolio right from half a ton to 49 tons, and we are working at not only improving the current portfolio but also coming up with new products. Now, as far as MCV is concerned, 16 ton to 25 ton is a market which is growing very well due to e-commerce. I mean, essentially due to consumption, so e-commerce or.
You expect Ultra to come in this range?
So the highest model of Ultra, which is comes with the 16 ton GVW or more than 10 tons payload, is the one which will actually address the requirements of these customers very well, give them very fast turnaround time as well as improve the profit potential.
And you will be coming out with MCV portfolios also going forward in this.
So MCV is separate, as you know. We have a Signa and a Prima brand there, so those will continue to be there. And Ultra, we have stretched it to the extent that we can, and you will see further going ahead. We will meet again to see further action from our side on products.
Final question, you have e-way bills coming in and many of the states are now going to introduce intrastate as well. Are you seeing customers holding on to it, how it's going to be implemented before taking a purchase decision?
So I don't see that as a deterrent right now. If at all, it will be a temporary thing, and wherever the customers need any kind of help to tide over some of these areas, I think we always step in and provide that kind of help.
Thank you very much for joining us on Bloomberg today. Thank you.